How was your weekend? If you have savings in an American bank or if you work for an American bank, chances are you spend the last few days worrying about your finances. That's because another US bank has collapsed. We're talking about the First Republic Bank. It is the second largest bank failure in American history and the third bank failure since March this year. First Republic has been teetering for weeks now. 2 months back, it got a cash injection. 11 banks came together to save it. They injected $30 billion into First Republic, but the bank could not be saved. So this weekend, American regulators made some tough decisions. They took over First Republic, and now JP Morgan Chase will take over its assets. This has triggered more uncertainty. Is the US banking crisis ending, or is it getting worse? It started with the Silicon Valley Bank. We told you about it. It was the first American bank to collapse this year, the Silicon Valley Bank. Then another bank fell, the Signature Bank in New York. Days later, First Republic shot into headlines. This was in the month of March. The bank had lost some $100 billion. There were mass withdrawals, depositors began to flee, and now this bank is being bought. It's quite a dramatic story, in fact. First Republic is into private banking. It mostly serves the wealthy. The bank was started in 1985 with less than 10 employees. By July 2020, it was the 14th largest bank in the US. It had 80 offices, 80 offices in 7 American states and a staff of more than 7,200 people. It looked like a solid bank until crisis hit and it began to crumble. For perspective, look at these numbers. In January 2022, that is last year, one share of First Republic was trading at $200. In April 2023, this year, last month, one share was down to less than $5. So from $200 to less than $5. That's a fall of over 95%. And it's not like the bank did not try to avert the crisis. In the last few months, it tried to cut costs and sell assets. It decided to fire 25% of its staff, to lower the amount of outstanding loans and curb non-essential activities. Plus, it got arrested.